Hello, everyone. My name is Steve Taishu, and I'm a Senior Director of Product Marketing here at Datasite. Thank you for joining our Energy and Power videocast today. I'm very pleased to welcome Mark Castiglione, Chief Executive Officer at Alta Mesa Resources, for our conversation today. As we all know, the global crisis has had a devastating impact on industries and businesses worldwide. Today's videocast, part of our Navigating the Storm Thought Leadership series, is designed to help corporate leaders and strategic players think through the storms ahead and get some practical advice on how to start preparing their businesses and engaging advisors for the restructuring wave that's about to hit. You can find additional materials on the series as well as other energy and power content in your console. With that, I'd like to kick things off with our guest today, Mark Castiglione. Mark, before we get started, can you share a little bit about your background in the energy and power space with us?
Sure, Steve. Thank you. Thank you very much, and appreciate the opportunity to share some insights this morning. I am a petroleum engineer by background. That's how I started my career as a petroleum engineer, though I would say I've spent the last 20 plus years focused more on the commercial side, M&A in particular. Right now, I work with two partners at a firm called Meridian Energy. We're an advisory firm, but we have been plugging ourselves in as an executive team at Alta Mesa Resources, where I currently serve as a chief executive officer.
Great, very impressive. So I'm sure as we have this conversation progresses, more and more of that experience is going to help our viewers and our listeners, inform their own decisions. And so with that being said, Mark, energy and power came into 2020 with no shortage of headwinds. However, in recent weeks, the sector was hit with two additional blows, the OPEC Russia fallout and also the current global pandemic. In general, how would you say those in energy have responded to the recent events?
Yeah, Steve, times are, as you mentioned, times are really tough in the oil patch right now. It has been probably one of the hardest hit sectors for the very reasons that you mentioned. Crude oil's traded down. It's traded back up a little bit lately, but I mean, it's trading at decade lows in the 20s. And so you have demand issues from the coronavirus. You have supply issues because of Russia and Saudi Arabia. You've got natural gas had issues already. And so, yeah, the industry, it's been a tough time in the patch. You've seen the equity prices trade down significantly. The capital markets are effectively closed for the energy space. Equities have traded off significantly. They've traded back up a little bit the past couple of days, but high yield in the energy space is traded off, and you can see that certainly in where those yields are at today. The other complicating factor for the sector is that the banks have been and are in the process of reducing their borrowing basis, especially now in the spring redetermination period. And then, lastly, I would just say job losses have been very significant in our industry. So I would just say I've been in this industry for more than 25 years, and this is the worst I've seen it in those 25 plus years.
Wow. And, just going along, those comments and those insights, again, coming into 2020, it felt like the energy space had really, as cliche as it may sound, had really evolved to be a buyer's market. And I'm just curious, how do you see all of this impacting, at least short term, but probably medium and long, M&A, just traditional M&A?
Yeah, good question, Steve. And I think a lot of people have been expecting for quite some time before the recent downturn that there would be consolidation in the sector. But by and large, where we're at right now at this red hot moment, consolidation or large M&A or constructive M&A is going to be really challenging for various reasons. On corporate M&A, it's challenging because many of the bond prices are trading so low that and well below par that the changing control provisions of those indentures is going to require you to pay. If you were to buy a company, you would have to pay for those at par. And so the valuation doesn't support that. And so that acts as a bit of a hindrance to do corporate M&A, in particular for any targets that have debt, high yield debt that's trading well below par. So that's a complication. For those that are healthy, are they really going to want to sell at these prices? And I think the answer to that is probably not. And then on the asset sales, nobody really wants to sell right now, right? Prices are at all-time lows. So why would you sell right now? You certainly don't want to unless you had to. You can certainly see that in the way the A&D shops are right now. There's very little deal flow going through the oil and gas A&D shops. Now, the only caveat I would say is that there could be opportunities through the restructuring and bankruptcy situations. Alta Mesa is an example of that, where we're selling our assets as part of the bankruptcy process. So in any of these restructuring processes or bankruptcy processes where the banks end up as the fulcrum security, I think their MO is going to be to sell. They don't really want to hold the assets, so they are likely to sell the assets in that situation. I am starting to hear, at least anecdotally, that there could be some Chapter 7 liquidations just due to the volume of restructurings out there and the various assets that sit out there. But what I would tell you is, in a lot of these cases, when they're in restructuring, those are not going to be your premier assets that are going to be on the market. So it is, except for the restructuring space, it's going to be tough to get M&A done right now.
Sure. No, that definitely makes sense. And definitely going to go back in a shortly with a few questions with you around your experience with bankruptcies and restructurings. Before we do, kind of at that kind of more macro level, any subsectors? You mentioned oil. We talked about energy, coming into 2020 with headwinds. But are there any subsectors that you think might be in a position to potentially benefit or at least be more resilient in the current environment?
Yeah, sure. I think, and I'm going to answer that in a couple different ways. First, talk about it geographically. I think the onshore Permian area is definitely, I think, probably one of the most premier areas, at least in the onshore lower 48. So that's an area that I think can be resilient. It's a little easier to turn capital on and off there, and you're starting to see that. You've heard Exxon talk about that here just this week. And speaking of that, that's a good segue. The other is, you think about where in the space, what companies, what profile of companies are going to be more resilient. It's going to be the majors and the larger cap independents, those that are well capitalized with less debt. So I would just say, large caps with Permian exposure are going to be the most resilient right now.
Okay. And, flip side of that is, again, not just in energy and power, across sectors, hard times for everyone, but within energy, sure, any subsectors that you think just really are going to have a very tough time weathering the storm?
Yeah, the service sector is definitely having a very difficult time right now with the capital that's getting cut by the upstream entities and the lack of development going forward, the lack of fracking going forward. That's definitely going to impact the service sector, especially those that are tied to development. Geographically, the mid-continent's been hit really hard just because their returns don't work at this level of oil prices. I would also say that remote areas like the Bakken and Canada are also struggling right now because their netback prices, they're landlocked significantly, and so their netback prices are very low, even lower than what you see on the screen for WTI. So they're having a hard time as well. And then lastly, as far as company profile, the mid and small cap space is going to struggle as well, primarily because many of those companies have significant debt on their balance sheet, and there's not enough cash flow right now for that. And with the banks doing their redeterminations, that's going to create a liquidity crisis for many of the small and mid caps.
Okay, yeah, very, very, very insightful. And then I think, then a good segue to go back to a point you touched on a little bit earlier, which is, no shortage of headlines of what, the happenings within the energy space. Obviously, each company has unique considerations when it comes to making a decision around a sale, a restructuring, a Chapter 7. what are the general pros and cons that an executive team should be considering, or an advisor should be considering when they're encouraging clients to maybe shift away from a traditional, asset sale, and look at something else?
Yeah, good question, Steve. It's a little bit of an odd question because when you put the word pro and restructuring next to each other, it kind of feels a little bit oxymoronic. Nobody really looks forward to doing that, but I think you're raising a really good point. In some cases, it's just not a choice. Companies find themselves all of a sudden in need to do that, especially with what's happened here recently and how it happened so quickly. But the first thing I would say is it's really important that you have self-awareness about your company and where it's headed. And you need to be thinking about your balance sheet and need to understand your balance sheet completely. And you can start to do some things before you go into full-bore restructuring. For example, liability management can make a lot of sense. And in some cases, that could be kicking the can down the road to something that's inevitable. So you have to be thoughtful about that. But there are definitely things that you can be doing in advance of a restructuring to be proactive. For example, you can do term out financings. You can do M&A possibly. That's probably pretty challenging right now, but you can issue new equity, rights offerings. You can do debt exchanges, either debt for more senior debt or debt for equity. But these are all kind of liability management options that are available to some companies, but they're kind of the last ditch effort to avoid bankruptcy and likely avoid wiping out all the equity if it's not already wiped out. So what I would say, the sooner you start thinking about restructuring, better, because if you can start dealing with it early on, as opposed to when a gun is stuck to your head, then you can be in a better position to negotiate through the restructuring process, because restructuring is a negotiation with various folks in your capital structure, various stakeholders in your capital structure. So I think, from the pro standpoint, you need to think about restructuring as a tool and utilize it to your benefit. As far as the cons are concerned, restructuring is a very difficult, arduous process. This will be very time-consuming for many folks on your executive team, but especially the CEO, the CFO, and the general counsel. So it will be especially hard on them, but it'll also be hard on your employees, and especially those that are in the back office. There's a lot that has to be done in a restructuring. Another thing is that you will have a lot of chefs in the kitchen. So you're going to have your own advisors, you're going to have your own legal counsel, you're going to have an investment banker likely, and you're going to have a financial advisor as well. And so you're going to have additional chefs in the kitchen, and I'll talk about later, why that's important and why those folks are important. But they're going to, you have more folks in the kitchen, but other stakeholders are also going to have their own set of advisors. So you will have a whole host of advisors that you have to deal with, which leads to another point, which is a con of restructuring, is it's very expensive. All of these folks want to get paid. They're very smart and important people, but they're also very expensive. The other con that I would want to bring up is, depending upon your situation, you and your board may lose some authority as part of this process. And it kind of just depends upon your situation. In our situation at Alta Mesa, we had different capital stacks. We had a different capital stack for our midstream business than we did our upstream business. For example, in our upstream business, we had bondholders. In our midstream business, we didn't. And so that creates a little bit of a conflict of interest. And so we had to set up 2 independent directors for each of those entities. And so you can, in this situation, when there's conflicts, you can lose some of your authority and delegation of authority as your board can too. And so that's a little bit challenging, but it's important to do that as part of proper corporate governance, and it's just part of the process. So the last thing I would say is a con, and there's probably many more, but you will have to make some very difficult decisions in the process. And the main thing that I'm thinking of there is once you enter the world of restructuring, you will have to, have reduction in force. Now, if you're running your business properly and you're struggling financially, that's just a natural thing that may have to happen, but it's not fun and it's not an easy thing to do. But definitely there's a lot of cons to restructuring, but sometimes it's a necessary tool that you need to use.
Sure. No, absolutely. And your last point there on kind of the human capital or the people side of it is certainly always challenging, which kind of leads to, looping back to your point on start early or as early as possible. Sometimes there is that hope, right, that you can kick the can down the road. But I feel like another thing that you pointed out is with, no one anticipated the pandemic happening and having an impact as immediate as it did. I think there was obviously some thought of, will there be a black swan event in 2020? But, the likely suspects or, kind of the early challenges that people were anticipating, the elections, Brexit, those weren't the things that kind of drove us to where we are right now. It's a pandemic. And so are you seeing an uptick in activity? Maybe it's the volume or the intensity is spiking right now at a much faster pace than you normally would, or do you think it's about what you expect?
Yeah, no, good question. And no, it's definitely spiking right now. It's with the rapidity or the speed with which things have happened here and how quickly oil prices have dropped, and with the banks redetermining their borrowing bases, it's definitely starting to pick up. Whiting filed for Chapter 11 just last week. We've heard just this week that Chaparral Energy had their borrowing base reduced. And you can just hear anecdotally, the restructuring advisor community is very busy right now. Of course, they're busy in many spaces, not just the energy space, but the energy space, as I mentioned earlier on, has been hit particularly hard. And so I do think you're going to see more and more restructuring activity going on, from this point forward, in light of where we're at. Again, there's more borrowing base redeterminations, reductions coming, and that will drive liquidity issues for a lot of companies. And so I think you're going to see more and more of this than we've seen historically, maybe even worse than 2016 and 17.
Sure. And Mark, along those lines, anticipating that the volume will continue, that this will be a necessary step for many players in the space, are there certain strategic questions that the executive team should be asking themselves as they, embrace or kind of accept restructuring or reorganization as kind of a necessary next step?
Sure. Yeah. And I think, before even really getting into answering that question, I think it's really important that you have a realistic view of your business and the future of your business. And so the financial planning function at your company needs to be really, really functional and work really well so you can understand the future of your business. Part of what's important there is understanding where you sit with your financial covenants in both your secured debt and your unsecured debt, to make sure that you're on top of that and you understand and know what's coming. You don't really want to have any foot faults and certainly don't want to have any big D defaults as a result of not being on top of your business. The worst thing you can do is to find yourself in a free fall type situation because of a foot fault or a big D default. So you just really need to be on top of your business. Strategically, I would just say, and this was something that was preached to us by our advisors, is liquidity is extremely important. Make sure you preserve it. And especially if you're having difficulty, make sure you're preserving it. Make sure you preserve your capital. You're starting to see companies do things like cut dividends and things of that nature, right? And why are they doing that? They're doing that to preserve liquidity. So that's really important that you do that, that you preserve liquidity. It's really important that you understand your business. You understand the strengths and weaknesses of your business. One of the things that can happen in a restructuring process is you reorganize and you come out the other side, recapitalize, but you may need someone to put capital into the business in order to do that going forward. So you have to have a good business thesis for that. If you're talking to existing stakeholders, put more money into something that they've already lost a lot of money in, that can be very challenging, but you have to show them that you have an investable asset. And so it's really important that you understand what your strengths are from your asset standpoint. In some ways, strategy will be driven by your situation. In our situation at Alta Mesa, the fulcrum security was the banks, and we were operating under a cash collateral order with the banks, and the banks had a lot of control over us. So we didn't necessarily have a lot of say strategically per se as to whether we wanted to keep the business going or sell the assets. The banks decided that they wanted to sell the assets, and so we supported that effort, and we worked very diligently and tactfully to make sure that we achieved maximum value for the estate via the sales process. So it just kind of depends upon your situation as to what you can do strategically. The last couple of points I would just add is that relationships are really important in this process. Having, with all your stakeholders, I would say, especially with your banks, make sure you have a good relationship with your banks, but also the other stakeholders. And then lastly, make sure you have good communication with your vendors and with your employees. Those relationships are also important, especially if you're in a situation where you can continue to invest capital in the business while you're in restructuring. You want to make sure you have the right vendors by your side, and so it's just important to communicate with them and be as transparent as you can be and as is appropriate. So those are kind of some strategic, and I guess I would call them tactical things that you can be doing when you're thinking about restructuring or reorganizing.
Great. Those are all really deep, valuable insights. And as a kind of a themes that I'm seeing thread through here, Mark, a need to embrace kind of the reality of the situation,
Sure.
that you have a finite amount of time, probably a finite amount of cash, and then you're working with a large number of people, not just your executive team or your advisors, but the advisors of others in the process with the courts. And so there's that realism, there's that need then to move into how do you move through this quickly, and then the communication piece comes in. All of that, is kind of necessary skills or necessary evils, just general day to day, but just kind of magnified or amplified through this restructuring process.
For sure.
When you're caught in the midst of it, my assumption here is sometimes you may kind of lose the forest as you're looking at each tree. And so my final question to you, Mark, is what practical advice, would you give to those who are going through? So we talked about the strategic, we thought about kind of the pros and cons, but at the end of the day, what's kind of the practical bare bones advice that you would give to those considering you're about to embark on restructuring?
Yeah, I think there's a couple things I would highlight. I'm sure there's a multitude of things, and I'm sure I'm not the best expert in the world on this, but I would say hire really good advisors. I think that's really important. And when you do that, you need to make sure you interview them, you do reference checks. And again, what I'm talking about there is your legal counsel, outside legal counsel, your investment bankers, and your financial advisors that are going to come in. Those folks can be extremely valuable to you, and they're going to do a lot of things. They understand that space way better than I did anyway. And unless you've done a lot of restructurings, they're going to probably understand it way better than anyone on the executive team. So really important that you hire good advisors. You need to make sure when you're looking at them and thinking about what's important, I would make sure that you can work collaboratively with them and that they can work collaboratively with you, especially the project leads. These are people that you're going to be spending a lot of time with. You may even become friends with these people. You're going to be spending so much time with them. And I would tell you, in my experience, I've had a good experience there with the leads and have developed some very good relationships with those folks, but it's really important that you work collaboratively with them and they work collaboratively with you. You need to make sure, that they're fully qualified, know what they're doing. I would advise going with top tier folks if you can. I think that's really important. They have more experience. They're going to be handling things that you have no idea how to handle. The restructuring process, the bankruptcy process, and all the filings that go with it are just enormous. And they will handle a lot of that stuff for you and take that load off your back. So that's really important. Make sure you get good advisors. The second thing is just communication. I found this true to be in pretty much any aspect of my career, but in particular, when you're going through restructuring, I think it's impossible to over communicate. And so make sure you communicate with your board frequently. We often had, for a good chunk of the time that we were in the restructuring world, we have had weekly board meetings, and sometimes more frequently than that, almost daily at times. To make sure you communicate with your board. You should be doing that. You should have frequent communication anyway, but in restructuring, things are just changing so quickly. It's important that you communicate to them. And then lastly, communicate with your employees frequently and transparently. That's one of the things that we certainly tried to do at Alta Mesa. And our employees greatly appreciated that. Even when the message wasn't fun to deliver, they just appreciated having the transparency and the insight as to what was coming. Even sometimes when we didn't know what was coming, but just the fact that we told them, we don't know what's coming, but here's the range of possibilities, they seem to appreciate that. So to boil it down, two things: make sure you really pick good advisors, outside lawyers, investment bankers, and financial advisors, and then just communicate frequently with your board and your employees.
Great. Those are great points to advise on and to suggest. I was speaking with an attorney at a large firm a couple of weeks ago about, he's in the capital markets group, and he said, going into restructuring, I always think about the fact that this has been my client before this process, and my goal is for them to continue to be my client. And it also touched on what you were just mentioning before, which was, he was saying in the midst of this process, you're sometimes on the phone or meeting with this person in person multiple times a day.
Yes.
And those meetings are often long.
They are.
Yeah.
100%.
So
yes.
Yeah. So that communication piece, to your point, is critical. Great, Mark. This has been really valuable time. I hope you'll come back and join us as we continue the conversation with our audience about restructuring and just the energy space generally. It's always great to hear from leaders like you in the space, especially as we move through these uncertain times. So thank you for your time. And to our listeners and viewers, thank you for joining us. And we look forward to our next conversation with you as we navigate through the storm. Thank you.